I am seriously underestimating the orders of stupidity magnitude that we might end up dealing with in a few months. Is what you're saying?
Yes, that would be the argument. I think it needs more stupid than what is available to us right now in the market.
Welcome back to the Spelunking podcast, the most uninformative podcast in the world.
Back to our regularly randomized schedule.
Yeah, I don't even remember when we last recorded, but we had some sickness cases. There was all kinds of stuff. But we're here now. So we have a list of things which is brief, and in my mind I was like, we're gonna need more items, but then usually what happens is we have like 2 items, and then that's plenty. Should we start off on the Pudgy Penguins hyperliquid stuff?
Sure, that's a nice warm-up topic.
Yeah, Mika can just talk for 5 to 10 minutes on his analysis, and then we can grunt in agreement. And
it's a bull market when we're starting the discussion with an NFT project. So
yeah. Maybe to set the stage, kind of these are 2 examples now of like a large token distributions to like existing user / kind of like community member / like where the cap table is like it kind of went in a direction where people would do like a few percent, 5%, 10% airdrop, and then kind of there's a big treasury allocation that's kind of like the team over time capitalizing and kind of taking future fundraising needs into account. And then there is like the kind of VC portion as well, which has been like normally maybe 20% for projects or things like that. And these 2 projects are kind of in a very different space where the in token allocation for the community is a much larger, and then there is kind of there's no like vesting allocation, or not like a significant vesting allocation relative to what's been the case kind of before. And especially in the case of Hyperliquid, this kind of went very well for them, where it started off trading at like was it 4 to 6 bill kind of in the first moment FDV, and it's gone all the way up to 28. And the kind of in the market like this, and in something that kind of captures the attention, it also means that there's like forced buying in a way. If someone wants an allocation and they don't have it by the airdrop, they're forced to buy. So you can only kind of have flows in one direction. And then you're in a positive market where people don't really like dump their position that aggressively, or if they do, they kind of do it immediately in a way. And it's not like it's this thing that kind of grinds the price down all the time over time. And that's kind of like a new thing. And I think there's kind of like the screw VC mentality as well there, and kind of a bit of a return to the ICO age in terms of like what the cap table looks like and how distributed the tokens are. So and Pudgy kind of did the same thing, and we'll see how the price action there now turns out. But I think maybe I'm not even sure what the analysis is as such, except that it was very successful for Hyperliquid, and it's probably something where you can see teams doing more and more of it. So you've seen kind of a few different projects already announcing where they kind of pitch themselves as much a larger community allocation than anyone else. And
how large was the community allocation in the hyper drop?
So it's like 40% or so immediately, and then like 60%, I think, kind of over time, with kind of room available for future. The Pudgy themselves got like 25, and then kind of all sorts of random ETH users and Solana users got the number to like 60 or so. So you move from this area of like 5 to 10 to like closer to like 50% area.
But by community, you mean the actual like participants who are providing liquidity and whatnot? Because sometimes these teams say community, and they actually mean is like most of that is going to a foundation to eventually distribute. So.
Yeah, no, exactly. That's a good thing to separate here, which is that the community treasury governed by the token holders, quote unquote. That's not like the like, I mean, that allocation exists, but it's not in a dominant position where, like, the truth is, like, maybe a lot of teams didn't know really what to do with their tokens as such. So there's the VC allocation that they can't get rid of, and then there's some small airdrop, and then the rest is just in kind of this quote unquote community treasury, which is actually kind of held by the team, or at least very strongly influenced by the team. That and no, like, the tokens are in the wallets. Like, that's the difference with these cases.
So what do you think about that structure in general? Because, like, in my mind, so I fully understand for a project that's trying to get everyone to use it directly, right? It's like very much aimed at retail and trying to get retail users. That seems like a good way of potentially going about it. However, if you're doing a 40 to 60% community allocation out of the gate, you really need the market cap to be really large. Like, let's say that you launch at 300 mil, 400 mil, something like that, and you're giving out 60% to the community, in most cases something to investors. You start looking at a situation where your, like, actual funding for the project is, like, potentially in jeopardy. And so I feel like there's like a risk profile to doing such a large initial community allocation.
It definitely requires the kind of market to be on your side, because if you think about what are the successful airdrops, like Solana had the successful ones, Jito and Jupiter specifically, kind of during this last bear market, and that was because there weren't that many people using those services, so you kind of got this, like, huge upside. Like, in the bear market, there's not, like, because right now, immediately after those airdrops, everything got farmed to, like, the nth degree, right? So then you don't have, like, that kind of positive momentum from that airdrop in most cases. So it does also require, like, really great market timing, like the Hyperliquid and Pengu ones. Those specifically, like, I don't think would have worked maybe 6-8 months ago in the same way that they did now. But they kind of worked right now. So you really have to get, like, timing kind of right to get that valuation. But if you get that valuation, then you can kind of raise from there quite easily, because especially if you have a really clean cap table, like there's nothing right on the Hyperliquid one, then like the funds that want to buy in, they have to buy, and you're in a very good position to kind of sell to them.
Yeah. Also, Timo, I think that the Hyperliquid case is a little bit. I mean, this thing is basically an exchange, so it's a little bit different than other projects. Let's keep in mind that the Hyperliquid, the people who got a Hyperliquid airdrop got it because they were participating on the exchange and liquidity and trading and whatnot. Without that, the exchange is completely worthless in the first place. And second, this helped them really showcase how much activity there was there. And the team does feed from the fees, right? It's not like they need to go out and raise again by selling the token publicly or anything. In projects where there's not necessarily a business model, a real business model, and you may need to continue raising by dumping tokens on the market, then maybe. But in their case, I do think that it was quite a smart move to make it enticing to actually come in and provide liquidity.
Definitely, and they were the ones who. It's not like it's a playbook that hasn't been done before, and also it's not that the users necessarily knew that the situation would be that good. Like they got like an option upside that worked out for them very well, but you could have done that in like 100 different projects and it wouldn't have worked out for you closely as well. Maybe the relation there with Pengu is that, okay, you have this like Pengu token, which unclear what it does. It's kind of a meme token, but there is the abstract chain coming. So if you're able to kind of link ownership of one to the other, like there are interesting incentive games you can kind of play here still, where you had this kind of growth engine in the best case, which meme coins have been, and then you're able to feed that into the abstract chain, and you have like a positive feedback loop, because all of these, like when you do the token game, it's basically about like supply demand dynamics and whether or not they work out in your favor, and things that work out in your favor often go in the other direction when market goes poorly. So you can think like curve locking is the kind of classic example of that, right? Where when things are going well, it takes the supply off the market, but when things are going poorly, it's just like inflation, right, killing the entire thing. So yeah, it's like when you're playing these like growth games with your token, they're super powerful, but they're super powerful in terms of like variance in all directions. And yeah, so we'll see how like these kind of work out, because if you take a look about like Hyperliquid, yeah, you can trade like the majors and stuff, but then there's like this kind of long tail of like shit coins and meme coins that you're basically doing like stuff that you used to do on Solana a lot, or I still do on Solana a lot, and whether or not that ends up being a huge business that they're able to like really create a moat around it, like there is a moment where like the excitement does die down, right? You kind of shot the shotgun already, and now you are where you are, and now you have to do it kind of from an organic place in a way that you didn't have to necessarily before.
Have you guys tried Hyperliquid? I'm curious to understand like how does the onboarding work, because it's an L1, as I understand it. It's probably like a modified Cosmos stack or something. And so how do you get onto the L1?
You basically like bridge, like you go on their site and you bridge.
Okay.
Yeah.
And so like from Ethereum, I'm guessing.
Yeah, most of the people bridge from Arbitrum, actually, interestingly, but yeah, conceptually.
Interesting. Yeah, I mean, makes sense. Do you guys know if they've open sourced it yet, or is it still closed source?
I think it's still closed source. Yeah.
It's a bit sus. It's a bit sus.
Yeah. But I
Yeah,
guess like it's like those are things. Maybe those are the things that also kind of don't punish you in the positive markets, but tend to punish you more when someone starts thinking about them. It's kind of the classic. What would be an analogy? But like oh yeah, this thing isn't decentralized. There's like 4 validators that run it, but at the right moment, no one cares. But then when you start caring and when you start poking holes, then it becomes like a thing.
Look, and honestly, you know that I'm a big open source guy, but frankly, in cases where you have anyway a team that controls the contract upgrade, and there's like maybe 2 people on a 2 out of 3 multisig or something, then sure, you can open source it. Most people are not going to get through the code anyway, and audits tend to be what people actually look into. I mean, like Drift is open source, and I have sent a couple small pull requests myself, but by and large, all the changes come directly from the team. So would it actually add a significant amount of value in confidence, let's say, for users if it was that it is because it is open source versus closed source? I'm not entirely sure. Most people, I'm not even sure, are aware that it is open source.
Yeah, I'm more just thinking if it is a Cosmos chain, I guess it's got like permissioned validators or something like that, maybe.
Yeah.
But like if you do want to make it sort of actually decentralized, you do need it to be open source. Like otherwise you're just distributing a binary for the validators to run, and
Sure, but people wanting to actually make things decentralized in this market becomes a bigger and bigger if as the years pass, man. And I mean, making things decentralized used to be the way that you provided security, or that you provide a feeling of security. That's clearly not necessarily the case. It does help you in theory from shit like what happened at FTX. But again, if the whole team controls the contract upgrade authority, they could still rug you anyway, just not gradually. They have to rug you suddenly. And I think that if security is the concern, then something like what Cube does with keeping the funds on chain, and only like a multisig of validators gets to transfer them for once the orders have been executed, I think that's likely good enough for most people, even if Cube itself is, for intents and purposes, a centralized thing.
This goes into a philosophical discussion about like what is the actual benefit. In some ways, is the actual benefit of blockchains, and why do they succeed, and why do apps on blockchain succeed? Like, if it's just like fintech in some sense on like global networks, it's kind of, you get to a kind of simplistic argument about just like, okay, you have like one open internet versus intranets kind of thing, and then you also get kind of a regulatory arbitrage argument from that. But there is something to be said for, at some level of the stack, the kind of increased neutrality of it, and where you feel like you can actually really build on top of it. Because I think Polygon is a good example right now, where Polygon just had a proposal to basically use their bridge assets to generate yield on them, and then Aave in like a all of these are just proposals. One shouldn't say Polygon and Aave, but like conceptually in these communities, Aave is thinking about like basically pulling liquidity because of that from Polygon. And there you do have kind of a situation where, well, if Polygon is a business that operates in like this fashion where it can do all this kinds of stuff, it doesn't make it a safe place for businesses to build on top. And you get this kind of effect which you've had on the internet, and then like the core infrastructure piece like should be.
Wait. So in the case of Hyperliquid, right? Like, so that you're talking about basically like platform neutrality, and Hyperliquid, as far as I can tell, is like you have no guarantees of platform neutrality.
Yes, exactly. That may be okay for users, but it's not okay for people building businesses on top.
For applications, exactly.
Polygon is a little bit more things.
Polygon is a little bit more nuanced because, well, there's a whole drama, and people can go and, Aave is saying the Polygon team is trying to fuck them, and the Polygon team is saying Aave is trying to fuck them, and like blah blah blah. I don't really care. I don't know what's going on. But the difference is, as far as I understand it, that like the Polygon team can't actually ram through upgrades because there is a proof of stake network, and basically like you do need to convince the validators at least to upgrade. And this is where it comes in, like, is it open source or not? Like where is the who decides on what changes? And I think in Polygon it is genuinely the validators that decide. Of course, there's like a question of like how much do they actually decide if all the assets are in the bridge, and the Polygon team controls the bridge, and so on and so on. But so like so there's like, it's kind of like a layered thing. Like the Polygon chain, as far as I understand it, is kind of neutral, and so you should be able to build on top. However, this argument is about the bridge, which the Polygon team controls, where there is probably all kinds of like back channel dealing, and because the bridge is such a large portion of assets on the chain, you could make the argument that the Polygon team does control the chain, because like effectively the validators can't fork, because the bridge decides where the assets are. It's a similar thing to like how Circle and Tether can decide which Ethereum fork wins. And so yeah, I it's a little bit different, but it's sort of a similar aspect of like platform neutrality. The question I would pose around this though is like, which platforms do offer that neutrality? Like besides Ethereum and Solana and like L1s. Like you could argue that every single L2 lacks this property at this point.
And not necessarily every single L1, for what it's worth, because you mentioned something that is true in the case of Polygon, but I want to raise the asterisk that is not true in the general case of proof of stake networks, because Polkadot is effectively a proof of stake network. But if there is a governance vote to upgrade the behavior of the network, then the whole network gets pulled alongside it, basically. It's not like, validators get to choose what code they run or something like that. So in theory, Polkadot is a layer one that would not be neutral, because whomever controls the most tokens still gets to make it to RAM through an upgrade.
But you can fork.
As far as I know, you would need to completely fork and stop using the network altogether.
Yeah. So I'm saying on-chain governance is a way to make upgrading convenient. Cosmos has the same thing with their governance module. The purpose of it is basically just to coordinate an upgrade amongst the validators if that is the desire of the network. However, that doesn't prevent a fork in and of itself, right? Like the validators could just simply refuse. Like they could just distribute a new version, new state, and go without the upgrade.
I guess that not exactly.
A lot of coordination.
It's a little bit different than in Solana. In Solana or Ethereum, you can just refuse to install and run the new software.
Yeah.
In Polkadot, you would need to get actively involved in deploying a version of the validator that is cut off from the rest of the canonical network. So in Polkadot, not getting pulled into it requires active developer involvement that a validator may not have the experience for.
Yes, and it requires a lot of coordination, because you need to like you can't just fork and let the token balances remain the same, because then the token balances would vote in the same way, and like blah 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 blah. And so it's way more coordination.
Yes.
Than in other cases, but that's not. I don't think that's the same as lacking platform neutrality, because it's just changing who decides. So in one case, it's the token holders, and in the Ethereum case, it's the validators.
I disagree, because
that isn't clear. Like one isn't clearly better than the other.
Where I draw the line is that the effort required for someone to fork, basically. The default state in Solana and Ethereum is that unless you decide to go along with something, you're going to remain as they are. In Polkadot is the opposite. If you want to make the argument that people, as long as there's code out there, people can always fork, then we could say that Binance Smart Chain is a neutral platform, because anybody can run a Binance Smart Chain fork, right? Whereas I don't think anybody would identify BSC as a neutral platform in a way, shape, or form.
I didn't quite understand the logic of that argument. Like I understand the difference between these two structures. I'm just saying one makes it the token holder's decision, and the other one makes it the validator's decision. And which one is better for maintaining neutrality is not as clear, because there are circumstances where the token holders and validators disagree, and who should ultimately decide. My argument would be that quite clearly the token holders should decide, and that would be a better preserver of platform neutrality.
Not quite. To me, again, it's about how much work neutrality is about how much work do you require for your current system to keep operating the way that you wanted, that you had decided it should work. Basically, that's what makes it neutral.
Wait, but whose perspective are you talking from?
The perspective of the person that would need to fork if they want to, the validator specifically.
This is my point. Like the token holders decide, I want my system to work this way, and that's the Cosmos Polkadot structure. Is that like it makes that convenient, while the Ethereum Solana structure is kind of like the validators decide, I want it to work this way, and it makes it that convenient. And then it's just a question of like whose decision should it be. I don't think it has much of an effect on the neutrality of the platform. You could easily argue that if a platform does not do what the token holders want, then it's not being very neutral. But we don't need to get too deep into this because there's a lot of nuances. Like, for example, in a lot of Cosmos chains, the validators have a minimum stake, which is like non-existent, like nothing. And so, like, in those situations, you can very easily argue that a validator is not incentive aligned, like ultimately with the network. In other cases, it's different. So it depends on all these parameters, like how it kind of goes. But I think, just to like tie it up, I think like the platform neutrality argument is like a platform you control can be neutral for you, and so it's kind of like a question of control and whether it's neutral for the group that wants to do things with it. And there I would argue that quite often token holders are a much larger group of people for whom it needs to be neutral rather than validators. Validators are not actually using it.
I don't disagree with that, but where I draw a line basically is, okay, yeah, and I would need to look more into how they had described this thing as operating, because this is what I have in mind. So suppose that if token voters were to say, like, the network is supposed to vote this way, and everybody whose validator did not vote to go that way gets immediately cut off, then I do think that's a good approach. Or that they get immediately cut off or segmented into a separate network. That's fine with me. The issue that your machine gets dragged along when other people vote and that stake may be concentrated in a few hands, that's what I consider not neutral.
But you can turn it off.
In the case of Eigen, for instance, where basically if you don't go with the vote, you are cut off into your own little sub-fork kind of thing, is how I understand it. Eigen, for me, is a better implementation of that approach than Polkadot. But again, that's an issue of preferences and as nuance, as you say, so we can maybe move on.
Yeah. I like, just as a last thought on that, I think while there's definitely arguments for allowing validators to easily fork, if you take the approach of like, we need these systems to work for the end users always, having very coordinated upgrade mechanisms is like very useful. So an Ethereum upgrade, Solana upgrade, these are huge pain in the asses. Like, totally is on Twitter going like, guys, fucking upgrade. Like, like that's a massive pain in the ass. You need sort of like, it drives you towards a situation where you actually do want and need a Telegram channel where you have all your validators so that you can actually coordinate upgrades. And that's not ideal. But maybe there's a middle ground we'll discover at some point that sort of serves both of these, because they're all like, all these mechanisms are fairly old in some ways, and then we have a lot more understanding of the dynamics. Moving on, Willow. Did you guys look at this?
Willow,
Google's quantum computing chip.
Oh, the chip. Yeah.
Everybody's
freaking the fuck out, and I don't know why.
Everyone freaked the fuck out in the presentation. The most legendary line. They were like, this the calculation that we did with Willow sort of semi proves that the multiverse is real because we're doing computations in alternative universes or some shit like that. And I was like, that, my friends, is some of the most genius marketing from Google that I've seen in a long time.
I'll have what they're having. I mean, it's
right. Just like, just take a bunch of psychedelics, do some computations. I think so. I'm curious to hear your thoughts. I'll maybe give just a quick take because mine is very short. And I think it's kind of funny that this take is accurate, but we actually don't know if the computation they did is correct because classical computers can't verify it.
Look, I cannot. I cannot obviously discuss the particulars of the chip. That would be way beyond whatever I know of this or that fucking space. But
Oh,
what
so
I
for everyone's information, we're also highly trained quantum physicists. And
yes,
so we should
definitely.
totally
Niels Bohr and
believe
I
in
were
these.
shooting the shit right before this call, actually. So no, but I mean, there's some basic math things that you can use to extrapolate how likely, because people is like, oh my god, encryption is broken. Like, what's going to happen with Satoshi's coins? And like, okay, first of all, if encryption is broken and somebody's going to move Satoshi's coins tomorrow, like the entire online system is fucked. Because like, what do you think is secure in your bank? Like fairy dust?
Immediate anarchy.
Yeah, I mean,
back
like
to
chaos. No,
the
like,
Stone
this is like,
like
forget it. Like we go back to cocoa beans for money tomorrow.
yeah.
But
Then you need to
second,
go to the store and buy a bunch of beans and acquire some weapons.
But to steelman this argument, you can have quantum resistant algorithms, but in the case of blockchains, do you have to like delete Satoshi's balance to kind of get the same effect?
actually, yeah, you will. Well, for everything out there, you would need a hard fork, effectively, and you would need a hard fork that says on Bitcoin's case specifically, like keys that haven't migrated to this other new format by X period, then we just dev null them, right? We memory hold them. Nobody considers that's valid, so that's what you would need to do. But no, but what I was gonna get to the expectations is that this is like, what was it, like 128 qubits, something like that. And from what I understand, to actually break like RSA, you would need, I don't know how many million qubits. And the more, this is not like a linear process. Like the more qubits you add, the more things get entangled. So the more complicated every correction gets. The most sensible, optimistic estimates that I have seen is that, assuming that Moore's law continues progressing and applies, which who knows if it's gonna, you might end up breaking RSA in like 20, 30 years. That's a lot of time to prepare. Like I wouldn't see it on my laurels, but that's quite a bit of time to prepare. But again, that's not
20,
my
30 years
area of
still isn't
expertise.
like, you know, 20, 30 years, someone tells you, you know, like the aliens send a message that, hey, 20, 30 years and we're going to be there. Get prepared, boys. Like you actually would panic about that. So if it like I don't know enough about the literature to be confident about this, but if it actually is 20, 30 years, which seems optimistic, that actually seems like a very bad scenario to me already. Like there's so much stuff to do.
But the alien situation is different, right? The alien situation is we're going to send a message, get ready, and then people forget. What you have to assume with something like this is that, I don't know, every time that they add a qubit, Google is going to be remembering everybody to how great this is and how likely they're to be to break traditional encryption next month or something. So this is something that I suspect is going to be recurringly top of mind for people every time that that somebody needs to raise their stock price.
If the alien sent a message that we're going to be here in 2 decades, I wouldn't forget that. I think we like at least I ain't going back to just like whatever. Like it'll be on, you know, like Zoom calls. We start with like the alien situation, and then we get into what crypto investments we make. Like this.
Dude, you would, man. The rest of the world is gonna be distracted with who some royal guy fucked last weekend. So like,
no, I think that would become the mainstay, and there'd be countdowns. It would be all like crazy shit. People like committing suicide. Like it would probably stay top of mind because it's close enough where people can like see that if it's outside your lifetime, you're like, fuck it. Which is kind of like what you're arguing, or what Mika's arguing here in terms of the quantum stuff. But one thing that's important to note here is that, as of my understanding, this doesn't scale. So like you can't just add chips.
No,
indefinitely.
That's why I mentioned you need the entanglement, and then that makes the ever correction grow. I'm sure if it's exponential complex to it, but it does get significant. It doesn't get linearly complex with every bit. It's more than that.
Yeah. Yeah.
But again,
So, I mean,
I can't say
one
anything else.
one thing, like regarding kind of the preparation, I think on the alien front, we would start hustling. I suspect on this quantum front, we're not going to, and we're gonna be like the dumbest. We're gonna take the dumbest possible strategy of like study one day before the exam. Like we're gonna do nothing. We're gonna like prepare a little bit every time there's like a news article, but like ultimately the amount of stuff that needs to change and that needs to preemptively change on the internet and in computing systems in general is insane. Like it will take lifetimes to go through all this shit and figure out like what do we need to upgrade, how do we deal with the fact that the past data will have been compromised at some later date, etc. And so I'm quite pessimistic about this. I'm like I suspect that we'll do something once something actually breaks.
In the case of blockchain, let's
disagree.
say I migrate my whole life onto these systems. Like there's like there's stuff like there's like
No,
Ethereum doesn't
your whole life is already on systems that are secured by encryption.
Yes. That wasn't the point I was going to make. The point I was going to make is I migrate entirely to these systems, so that like everything that is most of value to me in my life is like within these systems. So we can just talk about like blockchains and their security. There's stuff like ETH isn't burned, but it's in the zero address right now. And Maker used to do the same, where it doesn't actually burn; it just sends it to that address. Like, isn't this a situation where the guy who breaks it will be like Google essentially? So you can kind of coordinate that, where they decide to break it and they decide to burn those tokens, or they decide to do something like an airdrop to everyone equally or something like that, that you could like kind of get apart this distribution problem. And then all the other ones about like
rely on
and things like that, you can just change the algorithm, right? And you'd be fine. So like this is an easier coordination problem because it's one platform. The like existing world of million different things is very difficult, but we could do this because we have like one area. We only have like this one thing, one problem to solve, like because it won't break. Like some things I assume may break in some like number generation things or whatever, but like smart contracts don't break like if the underlying stuff doesn't break, right? So you're fine here in our system. So I'm just trying to get the positive case of when this situation comes along, we must adopt global networks and standards like blockchains.
That's true. The upgrade is much clearer if you're standardized. The part of the problem and the complexity is that like everything, like somebody was asking me the other day, like how do you even go about like on a practical level upgrading all the encryption systems? And that's a good question, right? Because like companies up the stack don't do their own encryption. They're all like coming from somewhere low down. It's probably just like a library that like a whole bunch of people are using. And so it's actually a very like there's like a stack of companies that all need to upgrade for it to go all the way to the top, which is like kind of near the end user.
And the end users have to interact with this, right? Like I have to move my ETH secured by the current mechanism into a new address, actually.
Yeah.
And that's the same for passwords on every single service, right?
You know what would be really great is if all the encrypted old data was deleted.
Yeah. We just decided
if this was a forcing function for Google to delete all of its data on me, that would be great.
Maybe this is a good example
somewhat
of
unlikely.
Actually,
the
the main
of holding
things,
hard assets as well, like holding real estate or something that's in a non-digital format, you know. Like
yeah, you know, I just realized that something that might be a danger here, that might be a huge liability, are things like, what was it, Amazon Snowball, like the the gigantic drives where you could just store terabytes of information and then send them to a vault somewhere. That thing is probably not getting changed. You either destroy them or assume that anybody who gets access could access them, basically.
Well, we shall see. I'm not super scared, but I'm very much enjoying this multiverse talk. Especially since we have no idea.
If you guys had to bet, what do you think? This isn't the crypto podcast topic. What do you think the ultimate structure of the universe is like?
I haven't had enough drugs.
Multiverse. Of course, multiverse.
Yes. There's probably like variants of that of like, what do you mean by multiverse? Because like right now you can talk of universe here, but multiverse you can just mean that it's like in the kind of same space-ish happening, like
no. I mean the universe has a state, and every state change basically like spawns off another trajectory, and there's just an infinitely growing number of universes, and we're on one path within that infinite number.
How did it start then, the initial, like what was the, because then you had like a situation where you had 0 universes, 1 universes, 2, 4, whatever.
I mean, this is
now you don't have an infinite number.
We're getting into religious territory, but I think the best argument I've heard on why did it start was from Yosha Bach, who's like this I don't know, consciousness AI researcher, philosopher guy. And he was basically like, maybe the universe just defaults to stuff being as opposed to nothing. Like the whole concept of nothing, maybe that doesn't actually exist. Maybe that's just something we've made up.
Well, I have just sent you guys on the group chat that we have a link to today's SMBC, which I think is a great justification for the structure of the universe. But I can maybe post it on once we upload this thing on the show notes or something. That is, and I have that stuck in my head now. So it's a long comic, so you guys just check it out.
The famous argument, which I can buy, essentially, is that if you ask a question and you can't get the answer to it, it's not a relevant question. Like that's kind of like.
Well, I mean, we can discuss all this stuff, like, you know, is there free will? Is there not free will? Whatever. And
you should ask Dan Larimer about this. This is
well, Dan Larimer, I think, would talk about angels and demons. But yeah, like it's kind of like it's very fun thinking about it on the level of philosophy, but then very, very quickly in terms of empirical evidence, we run against just like, we're never going to find out. And so like it becomes like an exercise in speculation, and I enjoy speculating about that because I think it's also potentially like an exercise in logical chains, which are like interesting. But like this is a very deep rabbit hole. Like we can get into all this sort of stuff of like, what is mathematics? Why does this logical structure that is mathematics exist in the universe? And things like that. Like it's not the universe, it's sort of somewhat reflective of the universe, but it exists as a conceptual structure and all that stuff. But maybe we can go back to talking about AI agents and Solana and whatever.
Yeah, let's try and get this back to crypto. No, wait, just one reason, one thing that I wanted to mention, because I am more optimistic than you on how likely we're going to get concentrated effort towards addressing that in whatever time period we have, which is basically that there's a clear profit motive, and people tend to get motivated when there's a clear profit motive. I do suspect that whomever, first, is going to be an insignificant amount of funding towards it, and second, whomever comes up with the right thing is going to have a pretty patent on their hands. And I did see the stupid, I mean, I was around when there was a stupid amount of effort being spent on something much simpler and less commercially profitable, which was basically just avoiding the Y2K bug. So I have no doubt that when there's actually a profit motive for third parties, you're likely to find, assuming that there exists, you're likely to find a solution that gets commercially funded. So that's why I'm a little bit more optimistic unless you're not forgetting this thing and continuing to work on it.
I have a slightly different take on this, and I can draw on something. So like, if you look at like what existential risks are considered in modern culture, climate change reigns supreme over basically everything, and then stuff like an economy crashing is like not that big of a deal. I think it's partly because most people in power have no understanding of economics. But for example, during Corona, like it just like wasn't seen as that big of a deal. And I suspect that whatever idiocy leads to that kind of judgment applies also to this. It's too abstract. People don't understand it. They're gonna make they may fund some stuff, but they'll do it in the same way that people like started funding anti-AGI shit. Like they're gonna be way off base. It's probably gonna cause more harm than good. And ultimately it's not going to help us prepare for what's coming. So I'm very skeptical, because another way to look at this would be that let's say 20 years is a reasonable timeline. Like let's say this has Moore's law like growth, which I think is actually believable because it's a new technology. It hasn't matured. You could see like semi exponential growth if there's a lot of funding and resources put behind quantum development. Maybe not, but let's say that should be existential risk for humanity number one. Do you think that overtakes climate change? I don't think so.
I think that it does in funding, mostly because I don't see fixing climate change as being immediately monetizable. Whereas I do think that Andreessen and other large funds are going to want to make a ton of money on owning the post-quantum solution. So there's a significant private incentive to fund these things that there isn't on let's all not get burned to a crisp, because these people can just, I don't know, buy bunkers in Antarctica or whatever. But let's move on.
Wait, before we move on, isn't there a huge incentive right now to collect encrypted data, by the way? Because if I collect it right now, all of it, I can, So in some sense, one should assume that all data, is unencrypted because there's an incentive to gather it now. Yeah.
I mean, you should have assumed that from day one.
Yes. That's another point. But
the only issue here is that even Signal might not help you.
Yeah.
Which leads to the only reasonable practice for online usage, which is just don't put anything online you don't want getting out ever.
Yeah.
And if you go really, really tinfoil hat, don't say anything near your phone. Or your smart TV, or your car, or in fact anywhere. Just don't speak.
We're gonna need to go back to the get smart kind of silence, but
anyway, but I think that was a good point, that there's a much larger private incentive here. You could argue that climate change has the same thing, like massive property damage, insurance problems, like that. It kind of does exist as well, but maybe this is more clear and affects specifically the portfolio companies and positions of VCs very directly. So that could be a thing. Anyway, moving on. Mika, what do you think about AI agents on chain? We've been talking about them a little bit, but what's your views as of right now?
My view is that my general view of things is that the first version is always the dumbest version, like ICOs, NFTs, but then the truth is in there somewhere. That's applied to the current batch of AI agents, which are essentially like kind of KOL-ish figures in the Twitter sphere, is that these are actually slightly better than those in some sense, because they do genuinely have distribution, which is very, very valuable. And we've learned that kind of over how social media has gone and how like people have started to monetize that. We've learned that lesson very well. So this current batch is like, even though it's like as stupid, it's better actually. It's like a more full implementation of what we will see. I guess like the way I bucket the things is that one is going to be like the kind of user abstraction level where, like you said, like you just use like an LLM to do like a prompt before this call, like kind of prompt something that you want to happen, and that's how people will interact with like blockchains and finance. I think like that will happen. Like it'll be more like I'm saying on this call, like, hey, send Teemu $20, and that happens in that way. If my intent really is that. So that's like one. Second one is that like people talk about, okay, 99% of transactions will be done by AI agents on chain. And I actually do think that one is true in some sense. I can see like a lot of pockets of areas where they just make markets and do stuff like that. So it'll be like there on the like level, like finally you get the kind of internet micropayments between bots vision that people have. Like this is this thing that people have talked about like forever, right? So you do get like some new version of that. So those are the things that will happen in addition to like these KOL type of bots. So I don't know, like it's all of those things will happen, starting to happen, you know, and it's actually very cool stuff. I'm not like short this theme in some sense, even like locally.
Okay.
Like this is
Can
a big
can I mention one thing just quickly?
Semantics Nazi thing before we continue on the
Yeah.
topic. It seems that then we ask about on-chain AI agents, and Mika's talking about AI agents with on-chain access, which is not the same thing.
There are no on-chain AI agents.
That's my point.
But yeah, and it's a good distinction to make. So these are not actually on-chain. Like I run the Twitter bot.
But that's the thing. Like the first version of everything is stupid. Like the implementation is stupid. But what I was saying is better is like the longevity and the kind of importance of them is better than the first version of other things you've seen.
Just to completely divert this, I found out the other day that in Polkadot governance, there's bots, and what these bots do is they just support the side that's higher. And so you have a vote. You've got like yes, no. If yes is winning, bots vote yes. If no is winning, bots vote no. Which I think is very dumb because it creates basically snowballing. And it just reminded me of like I think it will actually be commonplace surprisingly soon for AI agents to do analysis based on a set of instructions on governance proposals so that humans don't need to do that. They will have some instructions on the types of governance proposals. Ricardo's making faces. Listen, I know what you're thinking. I'm saying it's going to happen regardless. And anyway, it would be better than just vote yes or just vote no, depending on which one's winning. But so I think the way to do this more effectively, is with Futaki, or something like MetaDAO. There you can have AI agents playing games as much as you want.
One thing to say there is that I
agree with the last
governance things in the fullness of time. I agree with you. In some of these governance things, like I suppose what you're trying to optimize for is intelligent governance of these systems in some way, like with those, right? That's the idea.
I'm more talking about. I'm not even taking a stance on intelligence. I'm rather taking a stance on or not taking a stance, but saying that because it's just reality that humans can't be bothered to look at every single governance proposal, and they're already doing these dumbass fucking bots to do this shit. It would actually be better to have an agent who could they may be wrong or right or whatever. It doesn't really matter, but they could have instructions to do they feel comfortable making a recommendation or this, or do they pass it to the user and basically function as a filter because
so that's actually correct. Like what I was gonna say is I believe that part is correct. I think with the current governance systems, you just talk about in the short term of the crypto projects that are large nowadays. I think there is so much entrenched interests from the different parties to basically vote for stuff that's beneficial to them. The most common example being I get stuff from the treasury because I do X, Y, Z. That the incentive for the current batch of important like governing token holder delegates, whatever, isn't to optimize for the intelligence or not even, but like to answer your question, it's not to do that. They have a completely different goal in mind, and that goal does not allow for your world, which means that this is like I don't see it happening in some like specific big projects right now.
I'm saying like maybe the delegate uses a bot so that they don't need to do that much stuff, right?
I see, and to lobby and stuff like that as well. Like that's a like
Partially.
yeah.
It doesn't need to be a KOL bot. Like it can just be an LLM that looks at every governance proposal and tries to, like, for example, a delegate could offer a service to people who are delegating to them that like they'll automatically flag things they think will affect the one who's delegating, right? Like you have, I don't know, you've got some big VC fund, Paradigm is delegating to you. And so like it'll, based on a set of instructions, try to identify governance proposals that would affect Paradigm and flag those. And basically like it's just automating the delegates' work, right? Like that's it. And that's why I think it's 100% going to happen. The one question around this that I have for you guys is, do you think AI agents are the ICOs, NFTs of this cycle?
You mean the overhype thing that people are going to throw out a lot of money blindly without?
Are AI agents what are going to cause the bubble?
Interesting.
I'm gonna say yes. And like all bubbles have a financial leverage aspect to them, which I think like Michael Saylor is capable of doing on his own. But then there is like these other storylines that are like the kind of the thing that you're leveraging. And I think this is good enough to be the thing that you can then like lever up basically on.
It feels similar, right?
Yeah. So if what you say if what you mean by saying the thing that's going to cause the bubble, you mean like the thing that gets massively overhyped, massively overheated, and then
Pulls in
when it
retail.
deflates, a whole lot of people get insta liquidated, and this causes an overcorrection that sends even unrelated stuff into an ice age for a while. Then yeah, it's actually possible.
So we were talking about this with Mika at dinner the other day, but like what causes this cycle to crash? And I honestly don't have any idea as such. Like this cycle seems a little bit more stable than previous cycles, but I do have this thought that I haven't been able to get out of my mind, which is maybe one of the AI chatbots that gets some like multi-billion meme coin. Like they have meme coins. These things are trading in the billions, right? Like it's fucking insane. So imagine that goes up way more from that. We have a 50 billion meme coin that's where a large portion of supply is held by a bot that has full access to the wallet, and they just dump. I think that could be it. And if it happens, it's going to suck. Although for those people, like you did invest in a meme coin, if it happens where, you know, an AI was in control of the main wallet and, you know, all that. But I could see that kind of shock happening and being very unexpected. So, we'll see.
But that would also mean in this particular case, given that this is partially, as Mika was saying, an issue of leverage, then whatever you're leveraging is the thing that gets wiped out. So if this is the bubble that causes a collapse, then it also looks like this would be relatively localized collapses, right? Say a particular agent in Solana gets overheated and then liquidates a whole bunch of stuff en masse, and Solana gets fucked, but that's unlikely to affect Ethereum, Bitcoin, or others, right?
I think you're being a bit pessimistic on the scale of stupidity here, where where
That's a great line.
yeah, yeah. So so like what I'm talking about is that real kind of fire where not even just meme card. I feel like it needs like a little bit of a twist to it somehow, so that it is the most famous thing on the planet at the moment. Like the kind of crypto at its top when it really, really like hits that kind of bubble.
It's
There's
Kim
something.
Kardashian.
Yes, it is. It is like the most biggest thing that there is, and when we get to that scale, I think we can be capable of kind of collapsing everything at the same time. Like again, like you start to question this, and then you start to question other things, and you start like I think like it's localized because you're thinking about it in the context of what it is now times some multiple, but I think there is like a level of stupid we can get to that really
what you're saying is not necessarily pessimistic or optimistic, because I actually would have a hard time picking which side that is. I am seriously underestimating the orders of stupidity magnitude that we might end up dealing with in a few months, is what you're saying.
Yes, that would be the argument. I think it needs more stupid than what is available to us right now in the market.
Yeah, and it can perfectly get more stupid. I mean, the last cycle we had Zuckerberg's sister LARPing about we're all gonna make it. So
yeah. So I think there are crystal paths here.
There's another reason that it could happen, which is that I think there's quite a high likelihood that all these different like AI agents controlling wallets will be sort of systemically linked. They'll hold each other's assets. This is already happening, like because it's a marketing strategy now, right? If you're trying to build an agent, you want to airdrop to the most popular agent and hope that they talk about it. And so I think there's quite a high likelihood that they're all holding each other's assets, and then if someone does something, it leads to a chain reaction, and basically crushes the whole sector.
Yeah, like if you think through the previous cycles of who dumped on us, 2013, kind of Mt. Gox, in a sense, dumped on us in a way. That wasn't sell, but it was something. Then 2017, you had the ICOs, and that was just ETH selling. You just would open up the treasuries of these things and see every day moving to exchange, and it felt like it would never ever stop, and it was a large percentage of the supplies. Last time, you kind of had like Luna Foundation selling BTC reserves, FTX selling people's BTCs behind their back. You had whatever Genesis and Celsius and BlockFi and these guys were doing that resulted in forced selling. You could have the great like AI selling cascade of 2026. And I could believe that story.
Yeah, but that's again the thing where I think that even if one of these assets were to get massive, given that these things are all on chain right now, they are required. I mean, chains are pretty much self-contained universes. So these things are required to hold the things that are available on the chain, unless, I don't know, somebody bridges Fartcoin to Ethereum, and then the Ethereum bot holds the Fartcoin asset. That's why I think that even a massive collapse that could send Solana to zero, if we get that, the Kim Kardashian on Solana dumping on everyone, I still see, unless we get that interconnectedness in between chains, I also see that mostly just crashing a particular ecosystem. The example that you gave of FTX, they were dumping assets from everyone across multiple things, right? Same with the whatever the US lenders.
You only need a big enough shock for people to panic and dump their assets.
Exactly, because you could have said the same thing about Axie Infinity, and you could have even said this about NFTs, because it's not like NFT positions were like held on leverage, but it was just like everything unwinds at the same time, like kind of situations where people trying to protect their wealth and stuff like that.
And people feel that the wind is changing for whatever reason, and they don't know if there's an equally stupid agent on their platform, so they start dumping just in case.
Yeah, exactly. And realistically, right now, all this stuff is on Solana and Base. That's not like a lot. It's not like a widely distributed ecosystem. That's two places. But we'll see. I mean, who knows? Maybe the agents themselves are the ones who are like, holy shit, I need to protect my capital, and then they all dump across all the ecosystems because they're fucking chatting on Twitter, and like we're getting into like levels of complexity here, and we don't know what these agents will do. Even the people who are controlling them, if they have unfiltered access, don't know what they're gonna do. And
If
so
there is a big bubble in like the next, let's say, year or something, well, whatever the time frame is, and we think about the story we're going to tell after that, I believe we could have told, like maybe FTX, we couldn't have told that story necessarily, but we knew that like there is like pretty crazy like leverage things happening that are uncollateralized in the ecosystem before, and we kind of knew what an unwind of like Luna, you could say, you could see what the unwind of something like that would be like. So here, like if we think about the story we're going to tell in 2026, you could tell like this kind of the AI bubble, which is the kind of a hyper crazy version of something like NFT gaming bubble, and at the same time you can unwind Sailor very hard. So like you have these couple of things that you can point to where you would imagine that the story afterwards is one where it makes sense to tell that story. Like if it wasn't the AI story, I struggle to find what it actually is in some sense, and that would kind of make me bearish at the moment. Like if it's not going to be that supercharges, I don't think we really have another thing here that is quite at that level that can cause that kind of spark.
So elaborate on that. You're saying that if you couldn't see the likely cause for a massive meltdown, then you would be bearish? Is that what you said?
No,
yes.
yeah, like
basically, right?
Yeah, like I don't
I mean,
see.
it would make me feel.
Not
Like
the
there's
cause for a
some
meltdown, but the
fundamental
cause for a
way.
bubble.
There's some fundamental way in which ETH is not undervalued. Like you can look at the network and see like $500 billion. You're like, is this really the impact in the world right now? And you can be kind of skeptical of that and think that it'll go lower from here. And so what requires it to kind of catch up and to increase those valuations is like things that actually really take off in a big way. And the one thing that can take off in a big way right now in the short term, in the long term, I think like all this is whatever noise, and we kind of talk about it too much because it's our day to day. But like overall, these systems are like on a path to conquering everything, yada yada. But like in the short term, like there isn't something else to me on chain natively that really captures the imagination, even close to what AI agents are.
Yeah. I need to jump in just a sec. So I would like to just close off with a brief warning or something. That if you are running one of these AI agents, it's very easy now with things like Eliza from AI 16Z and virtuals, which is on the base side of things. You probably are liable. AI agents are not liable for things. So just be careful.
As I had described at some point, I am pretty sure that at some point somebody's paying an AWS bill or something. And if that is you, good luck.
Yeah. Well, again, depends. If you didn't launch the token, if it's just a token that you've adopted or been airdropped, that's different. But if you launched the token, you have an AI agent controlling a wallet that legally, that means you are controlling that wallet. And so you should be very careful.
And for what's worth, actually, the only actionable advice people should take for this is talk to a lawyer. Don't listen to us. We have no idea. We probably know more about quantum physics than we do about whatever the legal peculiarities of whatever you are based.
Yeah, when we say be careful, it means talk to a lawyer. That's a good way to sum things up. But also, AI agents are fucking cool. And literally AI is going to take over the world, not in like the AGI way. We're just gonna be able to automate everything. Like there's going to be one person companies that do shit that used to require 100 people. And I think that's great. I'm really happy about that. Now all I want is all software to be GPL licensed, and then I'll be happy.
Well, actually, with things like it gets trickier, and there's going to be a long discussion. You need to jump, but with things like agents that depend so much on models, the license for the software is less important than how much access you have to the model. But anyway, that's a different discussion.
Models is going to be open source models. It doesn't like you just want to. There's going to be plenty of different models you can use. It doesn't really matter. My point here is more along the lines of like I think AI allows us to eat software company margins, because replicating something that some company has spent 100 million building 10 years ago will now cost nothing. Like you can do it in a weekend. And I think that's really exciting because it may like we're now at the state of LLMs where like everyone can be an indie hacker. Like you can be educated as a fucking artist or like an anthropologist, like whatever. It doesn't matter. You can write code, you can do stuff. Well, you don't actually write yourself, but you can have an AI write code for you and do things. And I think that's quite exciting. And AI agents in the blockchain sphere are like an instantiation of that also allows you to kind of like take part in the culture. But it is worth mentioning also that those tokens are total meme coins. They have, what is their underlying value? Maybe someone at some point will come up with a reason for them to have an underlying value, but right now I don't think they do.
And that could be the moment that I was talking about.
That could be the moment. Yeah. I mean, it's one of those like 2 minutes and then I need to go. But it's one of those things where like I think ICOs and NFTs were not that interesting because it was like funding stuff or just picture, like here there wasn't really like a large design space, right? Like funding mechanisms is not like an exciting design space. It can change the world, but it's not like inherently emotionally exciting. NFTs for some people seem to be more emotionally exciting. I think there was some degree of design space that, for example, Dapper Labs Crypto Kitties kind of explored a little bit. That design space never really took off. Like it would just became like it's just a community thing, and that's fine. Here though, I think the design space is very large, and I think that's like an exciting thing. Like there's going to be a continuous stream of new ideas of like how to have AI agents interact with the world, how to have them interact with blockchains, how to allow kind of people to coordinate around AI agents and do things like that. So I'm more excited about this in many ways than I was about ICOs or NFTs.
I would agree, and partially it is because even though I shudder at the thought of agents acting in governance, I also shudder at the thought of most people acting in governance anyway. But it does lead to something that it ends up leading this case that you mentioned, where somebody may have a bot that filters the proposals that they actually need to pay attention. It falls into the category of like cognitive prosthesis that I find really fascinating, stuff that takes work off your hands. But also I think that something like agents with on-chain access now is a lot more interesting than what we have with ICOs and whatnot, is because both with ICOs and with NFTs, there was by and large a massive separation between creator and consumer. What we have now with the excess of tools that people have access to, and with the very low cost chains like Solana and Base, is that anybody can just start experimenting with shit and see what happens. And this blurring of the line between the creation and the consumer, the fact that these things might be consuming each other tokens, that sort of combinatorial complexity I do find fascinating.
Yeah, it's fun. And I mean, like, it's going to be a prosthesis. Like, I 100% want an AI agent managing my Zettelkasten. I use Logsec for, like, whatever this like sort of second brain information mapping. I am lazy, so like if someone kind of did it for me, it would just be better, like no doubt. And this is all coming, and it's coming like very quickly. Like you can just go build this yourself now, which is quite exciting. I do need to jump, so thank you guys, and thank you for all the millions out there who are listening, and we'll see you next time.
Ta-ta.